Hey everybody, Preston Brent here with our Trader User Group. This is our weekly roundup for the week ending February 13th, 2015. There are 3 Friday the 13th in the year 2015, and if the other 2 go like yesterday's, then it should be a pretty good year, at least for this particular day. And by the way, I want everybody to have a happy Valentine's Day today. So why don't we just jump into everything. What I'm showing on the screen here is the E-mini S&P 500 futures. You know, and as a reminder, the markets this Monday are closed here in the United States. It's going to be President's Day. So we'll see if there's going to be a continuation of this breakout that we had on Friday, which was really, we finished the last part of the day fairly strong, but we've got a busy week coming up as far as other government and economic indicators. Tuesday, we got the Empire State manufacturing index. We got home builder sentiment coming out. We got the PPI and housing starts, industrial production coming out next week. We've also got the meeting minutes for the FOMC from January. So all in all, it should be a really very interesting meeting or in a week. Now, as you can see on this chart here, it goes back quite a ways, and you can see here on this the way I've got this thing drawn here, that going all the way back here on the left-hand side of the screen, back a few years, we've stayed fairly consistent in this tight channel. This yellow line is the 200 EMA, which has just kind of trailed the channel. It's a little bit of a separation here from where we were right here, which does say that we're getting a little bit weaker as we go up. Now, this is a daily chart. You can see here that on Friday, that's this red line here, we made a new high in the S&P 500 futures, and we are setting up for a bearish divergence here, a possible bearish divergence. I want to zoom in and show you guys a little bit more about what I'm seeing right here, and let's just kind of take it for what it's worth here. So if I zoom in, and I'll show you what I mean by this divergence here. We had this very strong breakout on Friday as we went into close, and that really thrust the market up to these highs of 2095. That was the intraday high. Of course, we closed Friday at 2093.50, but we had a intraday high of 2095. And as you can see, this blue line right here is the opening price for 2015 at 2055. So we're about 30 points, 30, 40 points above where we opened for the year. And this red line down here is the intraday low for 2095. So it's a fairly tight range, and it's been very volatile, as you can see on the chart here. If I were to, kind of draw in the bottom part and the top part of this range here, you can see that we've been pretty much down at the bottom and at the top several times, several instances, and that would showcase itself in the volatility index, which has been much higher. I said going into 2015 we're going to have more volatility, and that's what we're getting right now. Now, I had mentioned just a few minutes ago a little bit about a bearish divergence, and I wanted to show you here. I'm going to pull up the RSI first. The RSI is kind of a good little indicator to show you this. And basically a divergence is simply what it means, a divergence in indicators. You can see here as we're making new highs, clearly you can eyeball that and see what we're doing. But you can see the RSI has given us one of these numbers here. That would suggest that we're going to have a little bit of a pullback. I would not be surprised to see us come back and test 2055. Not sure if it's going to happen in the first couple of days of next week or even next week, but I believe we're going to come back and test that just because it's a psychological barrier. You can see the markets got hung up there on 3 or 5 different occasions before we finally broke out. 6 different occasions we were testing above and below 2055 until we finally broke free last week on Wednesday, Thursday, and Friday. And then on Friday we had a late surge that pushed us, and we took out that prior pivot high there of 2088.75, and we finally closed. But I do believe we're going to get a little bit of weakness next week. And for those of you that were riding this bullish move on last week, then you may want to set your stops just a little bit tighter. The other thing I'll show you here is I've got a strength indicator that just shows you, and it measures the strength of the movement up. And you can see right here, the strength of that move right here is symbolic right there, just a lot of strength. And then this move right there was very limited, not much strength at all, which gave us that bearish divergence, which really led into this big move down here. And then we had another thrust up here like this to make new highs. But again, very weak, very, very weak. So that tells me that this move up, we've got to anticipate a little bit of a pullback, maybe some consolidation, maybe some chop with a slight bias to the downside. That would be the way the charts are lining itself up right now. So that's a little bit about what I'm seeing in the E-minis. The one that had the strongest day was the Nasdaq. Here's the Nasdaq E-mini 100 futures. And you can see here, we made this new high of 43.82. But again, showing the strength gauge down below, you can see here that, a lot of strength in this move right here. Not as much right there, very minor. And we're going to be bumping up against the northern part of this upsloping channel here, which would suggest, maybe coming down and testing this, which is now going to be a support area for the Nasdaq. Nasdaq's been strong this year. The other one that has been strong that we've seen, that I've seen, is the Russell. And if we look at the Russell, you're going to see the Russell also had a breakout to new highs here at 1222.40. You can see this shaded zone at the top of my chart where we've been in this. And this goes all the way back to March of 2014. And as we get ready to go into March in 2015, we're right back where we were before. All right, we haven't really gone anywhere. We're just a little bit higher. But every time we get up in this area, we just have a hard issue. We just poked our head up above here. It's the first time. So we've hit all-time highs in the Russell. And now the issue is going to be able to hold it. But as you can see, we got a high here and a higher here. But if you look at that, again, bearish divergence, which would suggest a little bit of a pullback here. And, of course, we're above the opening price of 2015 for the RUT at 1203.90. But I would be very careful. As far as entering new longs, I would sit on the sidelines for the first 3 or 4 days. We may have a spike higher, but I'd be careful. I think this was a good move up, but I don't have a lot of conviction just yet in that move. If we go back to the E-minis here, and let's get the chart back on the screen for you guys. And I'm going to show you the volume. You can see right here that, the volume is below average. You can see as we made this run up, it wasn't supported by a lot of buying. The volume is just, staying down very low. I mean, if you look at the measure of volume, this right here, all of this was higher volume. And then when we finally made this move up, the volume was very tepid. It was down at the lower end here, which would be below that yellow line there. So it's very low. So we need to be very careful about this move up is all I'm saying. The other final thing for those of you that are Elliott Wave fans, I love Elliott Wave. We've got an interesting pattern that shows a 3-4-5, and typically after a 5 pattern you have an ABC pattern where you've got a little bit of a chop, and then at the end of that it says, do I want to go higher or do I want to go lower? And it's hard to predict which way it's going to go. I think we're going to enter into some more chop. Now that's what we've been in. For much of this year, we've been in chop, and it supported day trading. And it has supported, short-term swing trading where we're down, we're up, we're down, we're up, down, up, right? And we took out that key level right here, which was the opening price of the year. I would not be surprised, as I said earlier, to come back down and test it again, all right? And now what we may end up having, and I told our members this in one of our prior sessions, you know, it may be a situation where, okay, we've had chop, and it was, you know, in this range right here. So this was our chop. And then once we broke out of that, now we may be in one of these kind of ranges here where we have more chop. So now, again, the environment still suggests chop, but we're slowly working our way higher until we take out the bottom, and then we, you know, perhaps find another choppy range at either a lower stage or at a higher stage. So that's kind of where we are right now, and I don't see that pattern breaking. So the key is determining, are we going to establish a higher range of chop, or are we going to break and come back down into the original range that we entered 2015 in? Now, this is a great environment for credit spreads. Volatility is a little bit higher than it was in 2014. I'll show you the VIX in a minute. And with volatility higher, credit spread traders have a pretty good advantage. Well, why don't we look at the VIX now? And let me just get the screen up here for you. What I've done with the VIX is I've highlighted 2014 in this box. And as you can see, and let's just zoom out just a little bit so that you can see. In highlighting, or I'm sorry, not 2014, 2015. So this is the year 2015 right here. And this was right at the beginning of the year. All right, and this is where we are now. But we have been at a much higher range of volatility, going all the way up to around 23, you know, down to about 15. You know, so we've settled in this higher elevated range of volatility, which means credit spread traders do a lot better. As you can see, generally, for much of 2014, and it's like this on the left-hand side of the chart as well, we've been down in this area for volatility. But now volatility's taken it up a notch, and now we're in this range right here. And you'll see that we just broke out on Thursday and then Friday. We just broke down, actually, to come into a lower range right here. We just broke that area there. So I think the downside of vol is going to be limited. Remember, we've got a lot of things going on. We've got Greece, and they've got to have their meeting on Monday, and we got to figure out what's going on with Greece and the Euro and the ECB. We've got the Ukraine and Russian turmoil going on over there. We've got the global shock of oil prices as they've fallen dramatically. We've had a bounce, and now the question is this just a dead cat bounce, or is it going to consolidate and move higher? And then also, finally, we got, you know, where the Feds here in the U.S. are going to start raising interest rates in 2015, or because of the potential global deflationary waves moving across this planet, will the Feds wait to 2016? So I think vol is going to stay elevated up. I don't think it's going to get down here. If it does, then I'm going to probably just take some long trades in the vol futures, just knowing that we're probably going to get a spike back up here when we get some more a word out of Eastern Europe and Europe on Greece. And so that's kind of how I'm seeing this thing take itself out here. So that's volatility. Bonds. I'm a perma short in bonds. Here's the bond chart. I got our members in TLT to the downside, TVT to the upside, and bonds to the downside. You can see this channel right here with bonds started almost on January 2nd, 2014. And we pretty much honored this channel. We bounced off the 200 EMA here once, but we've honored the channel. And right in that area there, bonds, you know, were kind of fooling everybody. But I think they're going to come all the way down. We're going to test this area here. It's going to probably be a little bit of a bounce because we got to have a counter trend move. We took out the 50 EMA right there. But should that break, we're going to get this final test of the 200 EMA. If we start moving back up like we did here, then I think we could kind of challenge this area. But should this break, we're going to be down in this area, which is where we were for quite some time over the past couple of years. And that is a big, strong move, and it can happen very quickly. Probably in 3 to 4 months, we can come all the way down to the 127 area. And that's a pretty good move. From right in this area here at about 45, that's about $18,000 per bond futures contract. It's a nice move. And should we break that 200 EMA, that's where I think we're headed. Now, I've been short bonds up in this area right here. Bonds is pretty tough because if you're not in it, you just watch it every day thinking, okay, it's going to bounce, and it never does. It's one of those trades where you got to just jump into it and enjoy the ride. Sometimes it can be pretty fitful, but you got to enjoy the ride. So bonds is moving down fairly hard here right now. And if we come over and let's look at in currencies, we're doing really well in currencies. We've got, and let me just get this screen back up here for you guys here on the U.S. dollar. As you guys know, we've been bullish the U.S. dollar, bearish the euro. Here's the U.S. dollar right here. And of course, we're hitting a little bit of a consolidation period here, but longer term, I am still bullish the dollar. I am still bearish the euro longer term. And my original projection here is right around 108, right on that colored bar here. I think we're just in a consolidation mode here before it moves lower. The British pound, this is one trade I'm looking forward to. We're going to play this to the long side. You can see here that we've already had a break, already a move here. And I've been playing short term, but I think it's going to be very, very soon. It's going to be worthy of a long-term trade to the upside. If we can hold this 50 EMA, then I think that's going to be worth a long-term trade. But the other thing that concerns me right now is we're in this 3-4-5 pattern. And you can see here, typically with a 3-4-5 pattern, you get sucked in on this, and then it moves back down, gives you a lower low down here. Then we go through that ABC, and then we get a little bit more consolidation. And then we have one of these kind of rounded bottoms, and then it starts working up like that. So right now, I'm still not necessarily a believer in this counter trend move. I need to see a little bit more evidence before I just declare that I'm going to go long the British pound. Okay, but I do believe Britain is the strongest economy over in Europe. It's ahead of Germany, in fact, and the U.S. is ahead of Britain. So that'll kind of be the order that I would see things improving on. Watch U.S., then Britain, and then Germany. Germany kind of, is doing everything to support the euro and the ECB. Let's see. One other thing I wanted to point out here. Oil, as I said earlier, here is the chart of oil. You can see that we're in this same potential 3-4-5 pattern. We're just below the 50 EMA. I want to clear a couple of hurdles here to declare I'm going long oil, although I have been trading near-term oil to the upside. Same thing with gasoline futures. Here's gasoline futures, and there are ETFs that you can trade as well. I'm working with our members on what you can trade here. UGA would be a good one for gas futures. Gasoline futures you can see here, but again, we got this 3-4 pattern. So does that mean we're going to come back down here and form a 5 at a lower low? No, does not necessarily mean that. But the odds favor that. So I am playing this to the long side. We just cleared a high made on February the 3rd on Friday. So if we can hold the 50 EMA and continue to get some escape velocity, then I will definitely go long with more in the gasoline market as well. All right, everybody, that is where we're standing right now. There's a whole lot of other things that we're long, and we're short a couple of key items too. Our members, you should be off to a pretty good start for 2015. I'm off to a very strong start. If you're not a member, I highly recommend you come on in and join us. We kicked off also this past Thursday trading adjustments and position management using options. It's a great webinar series. It's probably going to go over 10 hours. If you missed the first session, no worries. Everything is recorded. You'll be able to come in and check it out. I highly recommend you come in and do it. We had a great kickoff Thursday, very crowded room. I can't wait to go into 2 and 3. Our second part coming up is going to be on option synthetics and a little bit more on risk management. All right, everybody, have a great Valentine's Day weekend. As a reminder for all U.S. members, the markets will be closed on Monday. The futures market will be open, but the equity markets will all be closed. Things picking back up again on Tuesday. Have a great weekend, everybody. Bye now.